This LOS is calculate the break-even quantity of sales and determine the company's net income at various sales levels. Okay, this is a really important LOS where you have to pay a little bit of close attention, because if you've studied managerial accounting before, you'd say, oh yeah, the break-even, that's our fixed cost divided by our contribution margin per unit. Everyone knows the break-even, but when we get into the CFA reading, the normal formula that you're probably most familiar with, and we're going to see that again in the next LOS, that's called the operating break-even number of units. The operating break-even number of units is the fixed cost divided by the contribution margin per unit. And that operating break-even point is the number of units produced and sold at which the company's operating income is zero, okay? But in this case, what this LOS is looking at first, it just says the break-even number of units. It's not saying the operating break-even number of units. So the break-even number of units is the fixed cost plus you have to add the fixed financial costs, okay, divided by price minus variable costs, which is our contribution margin. So do you see here? Because remember, we were looking at the contribution margin statement as sales minus variable costs gives us our contribution margin, minus fixed costs gives us our operating income, but then we were subtracting this, what we called nomenclature was C, but it's the fixed financing costs, and that was giving us our net income, okay? So in the CFA, be very careful when it talks about the break-even number of units, not the operating break-even number of units. You have to take this fixed financing cost, add it to the fixed cost, and then divide by your contribution margin, okay? Be very, very careful with it. So the break-even quantity of sales then in terms of dollars or dirhams or lira, pounds, is just the break-even quantity of the units times the selling price. So recall, interest expense is not an operating cost for non-financial companies. That's something that we learned from the accounting in the income statement section, okay? So very careful here with regarding the reading of the questions to see whether it's talking about the operating break-even or the just the break-even. That word operating is so key. So we'll just finish this LOS with a practice question as we often do. And you can see one of the issues here is they're giving the numbers in yen, so they're running a lot of digits. And so that's why, that's one of the things they do on the CFA exam is that when you're working with so many digits, it's easy to make some little mistakes on the calculator. And that's why you need to practice on the calculator as much as possible, okay? So you can see here, India Motors now sells 1 million units at 3,529 yen per unit. Fixed operating costs are 1,290 million yen, and variable operating costs are 1,500 yen per unit. If the company pays 410 million yen in interest, the levels of sales at the operating break-even and break-even points are respectively, and I won't read all these numbers just in the interest of time, but they're giving you 3 solutions, A, B, or C. And the interesting thing to see is that for A, B, and C, the first number, none of them are the same. So it leads you to think that if I can do one calculation, I don't need to do the second calculation. So in this case, they're asking for the operating break-even and the break-even points, and which is giving 2 numbers, but the first number, all 3 are different. So if you calculate the operating break-even and you're pretty confident that you've got the right number, you don't need to calculate the second number. So that's just a little exam tip given while I'm reading the question. So the correct answer is B. So as I said, you have to be very careful knowing the difference between the operating break-even and the break-even. That's why this is a great question. So I've put again in bold, the operating break-even is the formula that we're usually most familiar with, which is our fixed cost divided by our contribution margin per unit. So they're giving us our fixed costs here. Fixed operating costs, 1,290 million yen. So as I said, you got to just be careful a little bit with the zeros. That's how we write that out. And divided by the contribution margin per unit, we've got it because we've got the selling price 3,529 per unit, and we've got the variable costs at 1,500 per unit. So sales minus variable costs per unit, we've got our contribution margin, which is, if I just bring up the calculator very quickly here, it's going to be 3,529 minus our 1500, and we've got our contribution margin per unit of 2029. Okay, so again, if I just bring up the calculator, we can run this calculation fairly quickly because they're giving us the fixed operating costs. You just have to be careful with the zeros. 1290, and that's in millions, so I just have to count 6 zeros. 1, 2, 3, 4, 5, 6. Okay, and then we're going to divide by our 2029, and we've got this is always in units, remember. It's 635,781.173 units. So I'll just move the calculator over to the right hand side a little bit, because then we're going to calculate, because this is giving us our answers are in terms of dollars. So now we've calculated the break-even number in terms of units. We have to convert that to dollars, so we simply multiply by the 3529, and we get 243,671,759, which is rounding to B 243,671,760. Okay, so the correct answer is B. We only had to calculate the operating break-even, which is fairly easy. It's the fixed cost divided by our contribution margin per unit. They gave us the fixed cost, easy to calculate the contribution margin unit. So we get it in terms of units, and then we multiply by the selling price, and we get it put back into the end. But the way that I want to finish this question is just to carry on, even though we've got it right. I want to review that this LOS was with regards to the break-even. And then with regards to the break-even, we had to add back the fixed financial cost to the numerator. So it's our fixed cost plus our fixed financial cost, and it's giving it to us here, 410 million in interest. So we're going to calculate 1,290,000 plus the 410 million, and that's going to give us, divided by our contribution margin per unit, which was, again, recall, the 2029. So if I bring up the calculator again, we'll just do this very quickly. I'll move it over to the left-hand side here again and clear it off. So 1,290, and then that's in millions, 1, 2, 3, 4, 5, 6, plus our interest, 410 million. So 410, then just 6 zeros. 1, 2, 3, 4, 5, 6. That's how I always remember it. And so I've got my numerator. I'm going to divide by my 2029, and I've got my break-even number of units. Okay, then I'm going to multiply to get the yen value times by the 3,529 selling price, and you can see I've indeed correct. I've got the 2,956,776,737. Okay, so that's a very nice little question that takes you through the calculations for not only the operating break-even, but also the break-even. Be very careful with the language. Excellent little question where you had to do both the calculations and calculate not only the units, but then convert the units into the level of sales in terms of dollars, yen, euros, etc. Okay, so that's the last slide for this LOS. Thank you.